Hey guys, I'm Corey, this is Tiffany.
We're the co-founders of Investor Life.
And we help investors scale their portfolios using other people's money.
So in today's video, we're talking about the biggest mistakes that we see people making in their investing journey.
Let's face it, a lot of mistakes can be made, but we're going to focus on 4 of the biggest mistakes that we see investors making.
And you know, the sad part of it is that investing can be a dream come true, but we have seen a lot of investors come and go over the years, and unfortunately that dream of investing in real estate, what it can do for your life, often turns into a nightmare. But there are ways to mitigate that risk, in our opinion.
So how can we mitigate that risk? That's what we're going to talk about in this video, because you know what? Other people have made the mistakes. We have made mistakes when it comes to real estate investment.
Tons.
So you don't have to make those same mistakes if you learn from these examples.
So mistake number 1 is not doing your research. Why do we not do our research? There's so many reasons. Sometimes it's overconfidence. Sometimes it's underconfidence, overwhelm. It's too much. And so we just say, you know what, let's just do it. Let's just go for it. And it doesn't always work out the best if you haven't done your research. Sometimes it's, yeah, it'll be fine. I know the area, I grew up there, but you don't do your research for investment purposes of the same area, the same property, the market that you're going into. So many reasons. Sometimes you just trust what other people tell you, but not doing your own research and substantiating the numbers that you get is one of the biggest mistakes we see.
So it's okay to get advice from other people. We absolutely suggest getting advice from other people, but back that up. Do your own research to make sure that that advice you're getting is sound and solid. And that's really the biggest mistake we see people doing, is they don't put the time and effort forward to doing that on their own.
So we always recommend building a team. Absolutely. But like Corey just said, you also have to make sure that you don't just blindly trust that team, even if they're great, even if they're well referred. You don't blindly trust it. You make sure that everything they say, because they're not going to have to suffer the consequences of a bad investment, but you most certainly are. So this is your job. The buck stops with you. You're the one who has to make sure that you're okay. So make sure to do your research.
Absolutely. So that's point number 1, not doing the proper research, backing it up on your own. Point number 2, pride in negotiating. We see that there's a lot of times people are negotiating on a deal. They're maybe, trying to buy a particular piece of property, and, it's down to the last little bits of negotiation. Maybe you're down to $1,000. I've seen people walk away because they couldn't get another $500 off of a real estate purchase.
So remember that one complex that we...
Oh, absolutely, yeah.
So we walked away from these properties because we had bought one for $91,000 and... no, it was the other way. We had bought one for $89,000, and this one was going for $91,000, and we wanted it for $89,000. So for $2,000, we walked away from it. Within 2 years, it had doubled in price. It was worth like $200,000. But because of our pride, we were like, "What? No way, we're not paying."
We felt like $91,000 was way over market value, and people were, we were buying them for $89,000. So why would we pay $91,000? These people are unreasonable.
But yet the numbers still worked at $91,000. But our emotions and our pride got involved, and we thought, forget it. So we walked away and lost out on $100,000 because our pride got involved. So don't let your pride get involved when you're negotiating. If the numbers speak, listen to the numbers, and it doesn't matter how you feel or what you think. If the numbers work, listen to them.
So building relationships within this business is extremely important as well. And sometimes our pride gets in the way. Sometimes we get hurt feelings because somebody didn't respond to us the way that we expected them to. Sometimes, well, they don't seem nice. They didn't seem cordial. Just get over it, okay? So the point is don't let your pride get in the way of getting deals done. So guys, a good deal, here's the key, remember this, a good deal is a deal that gets done.
Yeah.
That's the key to all of this. So don't let your pride get in the way of getting a deal done.
So mistake number 3, it is relating to our last one too, and it's about emotions. Now, when our emotions get involved, we can skew anything any which way that we want. And so when we're not being realistic in our numbers, it's because our emotions are involved. That can go from everything from, oh, I'm just going to put in, a 2% vacancy allowance, when you know darn well that the vacancy in the area is 8%. But, oh no, I'll do a better job of it because you really want this property to work. So when you're analyzing the numbers, you skew them however you want them to work. So not being realistic in your numbers is another big mistake that we see, especially newbies making.
So exactly, that's a really good point. So we don't want to be pushing that investment and trying to convince ourselves that it works if it clearly doesn't work. Okay, so we see people making that mistake all the time.
If you find that you're adjusting numbers and you put all your numbers in as they stand, and then you have to look at it again and go, well, you know, it's not as good as I thought it was, but maybe if I did this or did that, that would change things. Then right there, that tells you that you're emotional about this purchase in some way, and maybe you need to take a step back emotionally and really, really be objective. Another reason why we're not realistic in our numbers sometimes is because we're just inexperienced. We don't know what we don't know. So sometimes we miss things, and that's where having that team of professionals that you're building those relationships with that we talked about in our last point, having that team of professionals there to give you that advice, tell you what they've
Very
seen,
important.
tell you the things that you don't know, it's really important. So be realistic in your numbers, be neutral, don't be emotional, and don't force the numbers to work if they don't.
Okay, so we've talked about 3 points so far. Now, point number 4 is trying to time the market. And we see newbies, we see even experienced investors trying to time the market, trying to think, okay, I'm going to buy low and I'm going to sell high.
Yeah.
And when we try to time the market, 9 times out of 10, it's probably not going to work. Now, sometimes we can do it, absolutely. But most of the time, if we're trying to do it, it's not going to work. Here's the key. We don't know when a market has hit the bottom until it starts going up. We don't know when a market has hit the top until it starts going down. That's the only points when you actually know whether you've hit the bottom or the top, and you don't want to wait for those points to hit when you're buying or when you're selling. So trying to time the market is not a good strategy.
So we often use the phrase, it's time in the market, not timing the market. So you want to spend time in the market. You want to make this a long-term investment. You want this to be something that even if the market goes up and down, that's okay, because you don't need to sell. So there's a couple of things. You want to make sure that you're investing for cash flow. One of our biggest mistakes that we made when we were investing, we got really bad advice. And it was, oh, this market's going to go crazy. Buy as much as you can right now. And so even if it was negative cash flow or break-even cash flow, we were like, that's okay. Because, in 2 years, we're going to be cashing out. It doesn't matter.
Then the market changes.
The market changed big time. And we still have some of those properties, and they didn't cash flow for a very, very long time. So don't buy for equity appreciation. That's your gravy. If the market goes up, awesome. But buy for cash flow so that you can ride those waves, and either way you're getting paid in your sleep every single month.
Absolutely, and you can have time in the market. So that's really the whole point. So guys, 4 biggest mistakes that we see. Number 1, not doing your research, not backing up everything that somebody might have told you. Number 2, drop the pride, have a little humility when it comes to negotiating, when it comes to building relationships in this business. Number 3, be realistic with your numbers. Be under promise even to yourself. If you have joint venture partners, under promise to them. And then you can over deliver. Okay. And number 4, don't try to time the market. It's all about time in the market.
So thanks for joining us. If you found this video helpful, please subscribe to our channel. There's other videos that we've put in the description, so grab some of those links. And lastly, if you want support in your real estate investing journey, we have a Facebook group. It's called Fearless Real Estate Investors. So join us over on Facebook and post your questions, and join us for our free weekly live trainings that we do over there on Facebook.
So great to see you, and we'll see you on our next video.